Akash, the biggest acquisition in the education space in India was the acquisition of Aakash Institute by Byju.
This is a very simple philosophy we are working on. Can't do that all alone. Somebody would say that the business is not ready. Somebody would say that the industry is not ready. There's a regulatory risk and there is that kind of a risk. So people went away. We kept proposing and people kept rejecting our proposals. We got about 8-9 term sheets. Definitive agreement stages. We got a term sheet of 900 crores. And we actually signed up for 70%. Why are we giving majority? This is going up.
Yeah.
So then we started discussing 50% or less than 50%.
So,
And then we reached a stage where we felt that maybe the investors are not understanding the depth of this business. I got a message from Byju that they gave us a number, and that sounded like a credible number. It's 950 million. We are the king of offline, and we are leading in the online side. Why don't we put 1 and 1 together and make it 11? Any good thing, which and we've known it. It takes years to build it, but to spoil it, it doesn't take much.
one of the biggest challenges as a podcaster is to get successful folks to have a candid conversation. Today, I'm talking to Aakash Chaudhry, the co-founder of Aakash Institutes. He talks very openly and honestly about the long and winding road that led Aakash Institute's acquisition by Byju and the rocky journey that came after it. We talk about the educational business in India, how artificial intelligence is impacting or is likely to impact this business, and what his family has invested the vast amount of wealth that they created out of the acquisition into. I'm sure you'll enjoy this one. I'm Sandeep Jethwani, co-founder of Deserve and the host of the Create Wealth podcast. Akash, the biggest acquisition in the education space in India was the acquisition of Aakash Institute by Byju. I'm sure a lot went behind it, but from the outside in, it seemed like Blackstone took a 38% stake, and within a few months, an acquisition happened. Potentially one of the best investments that Blackstone did, I guess. What was the thought process going in at this point of time? And let's start with the investment that Blackstone did in Aakash. I suspect it is a profitable business. What was the thought process behind getting Blackstone in as a shareholder?
So Blackstone actually came in uh, going through our DRHP.
Okay.
In fact, our RHP and RHP was also out. So we were actually on our way for our listing in 2018.
Okay.
And since the market wasn't exciting enough or conducive enough, so our bankers suggested us to wait for some time. And it just so happened that the Blackstone team, went through the document and they felt that it's an investable asset.
Okay.
So they reached out and they said that let's go to IPO together in few years. Let's build this business more.
But so let me then go back to the thought process behind going for an IPO. Was it the fact that there will be liquidity and therefore some bit of de-risking for the family? Because a typical IPO is when, in such a situation, part of shares gets sold as an offer for sale and the promoters receive capital. Or was it some other reason why you felt Aakash should be a listed company?
So I think about the primary reason was to for de-risking promoters' personal wealth creation.
Mm-hmm.
Uh, and we started that journey quite some time back. I think I remember the first conversation for a private equity placement we had was back in 2012-13.
Mm-hmm.
So there was a time when uh, there were few investments that had happened in test prep.
Mm-hmm.
Mahesh Tutorial had gone public, Career Point has done listing, Career Launcher, Fitji, some people have taken some private equity.
Yeah.
So we also were approached, and we thought that, and we were a small business then. I think about 200 crores
Hmm. In terms of top line.
in terms of our top line, and we were a small business. And I think the pitch was that you are small, you are not a sweet spot, but yes, you come within our investment sort of a budget or scale.
Sure.
So why don't you start a journey with look at your peers, they're doing it.
Hmm.
And there's always a investor story that the people with deep pocket
Yeah.
with a lot of money can disrupt your market, and why don't you also look at this opportunity.
So therefore, you de-risk as a promoter while continuing to have the upside in the future also.
Upside. And we also felt that coaching as an industry has never had uh, good amount of talent joining.
Hmm.
So it's been an industry which has sort of come out of local tuition centers,
That's right.
local group tuition centers,
Sure.
and the only talent that industry had was the teacher
Yeah.
and the student.
Yeah.
Clearly, you can actually start anywhere. So we felt that as the market is growing, bringing in a private equity could also bring in a fair amount of credibility that the business is investable. More people would want to join. So I think we thought that, and then it will obviously give us some wealth creation opportunity at whatever scale it could at that time. So
Sure.
that's how the whole
Thought process
thought
began.
process began.
And then it got shifted to 2018 when the DRHP was finally filed.
Yeah, between 2012 and 2018, there were so many people who came, and they seemed interested. They went into diligence, and quickly they realized that this company has no system. This बाप बेटा चला रहे हैं, उसके बाद कोई है ही नहीं. So it was a very interesting point for us, and we realized that who else do we need? I mean, we know the business and we're doing it. And then when we were first asked to create a business plan, you didn't have a business plan. You didn't have an operating plan. So we were just very curious. This is the building, these many classrooms, and we have to fill it. And the only reason this will get filled, we do hard work in our teaching, we produce the outcomes, and the word of mouth will go out in the market, and kids come and join us. So this is a very simple philosophy we were working on. But then when we started working on it, I said, okay, this will need more people. This will go into many regions. There'll be people that'll be required to run that show. You can't do that all alone. And then we said, okay, fine. We will. You tell us what is missing, and then we'll start working on it. So obviously, people would come and they said, we are in investment business. We are not in building businesses for you and advising you and consulting you. So we do it once we invest, and as of now, we don't feel that you're ready. So I think some of these interactions happened with some really good names in the market, and somebody would say that the business is not ready. Somebody would say that the industry is not ready. There's a regulatory risk, and there is that kind of a risk. So people went away, and then some would come that there is a disruption risk. There is tech is going to take over. So we kept proposing, and people kept rejecting our proposals, and then we got really fed up of P को समझ नहीं आ रहा है, what is to be
So
done.
how many such funds would you have spoken to who said no?
I think about we would have spoken to many, but we got about 8-9 term sheets.
Okay, so it reached the term sheet stage where people are keen.
Some it reached the definitive agreement stages.
Wow.
And then somewhere my IC feels that there is a risk, and then they'll just back off.
Even after term sheet, after the definitive docs are being drawn, funds withdrew because there was some
They didn't
misalignment.
feel
earlier.
confident. They didn't feel
Wow.
confident with the investment. In fact, I think the first investment, we got a term sheet of 900 crores.
Mhm.
To say, and we actually signed up for 70%.
Mhm.
That okay, you take it, you run it.
Yeah.
You guys.
So you will go to minority and
you
they
go to minority, you do it.
Yeah.
And then obviously they did the diligence. They didn't find that this business is ready for investment.
Sure.
And then the 900 became 1100, then 1400, then 1800. And then we realized, why are we giving majority? This is going up.
Yeah.
So then we started discussing, 50% or less than 50%.
Sure.
And then we reached a stage where we felt that, maybe uh, the investors are not understanding the depth of this business as we do, closely working on it. So, let's leave the private placement and then go for a public placement. And that's where we started the IPO journey in 2018. So we spent about a year, got ourselves ready.
And what were the activities that you felt got the company IPO ready? Because the one challenge that VC families deal with or promoters deal with is what is an IPO ready business? And most people don't understand what the systems that are required to be set up. So, what were some of those?
So, the basic fundamental that we understood, if you're taking company public and it's a public money, it's a retail money, it's a FI money. So all they want is surety that my investment is safe and is going to grow. So let's, identify those components that will make the business safe and stable and certain, and not dependent on one or two pivots, but multiple pivots or pillars that can support it. And that's where we started feeling that, okay, one of the key requirements that came over and over again was to build a strong management team. It should not be limited to promoters. It should not be one man show. There should be some sanity discussion, and all the key decisions that the business has to take. So obviously that's where we started building our, as they call the C-suite, all kinds of executives that were needed. And before that, it was primarily people, who have worked with us for years and they've grown, through their tenure, through the ladders, and taken up those positions. Hardworking people, but obviously they had their, limitation after a point in terms of growing the business or understanding the subject that was getting complex as we grew from a North brand to an all over India brand.
But getting in these C-suite executives would mean two things. One is, in some sense, relinquishing some control, which today was vested with you or your father. And secondly, potentially ownership in the business via ESOPs, etc. So was that one of the thought processes like you had to deal with when you got in these senior folks?
Yeah, of course, that was a thought. But as long as you are the majority owner, you control the company, over 90%. You should not really worry about, the professionals will control. Obviously, that's where the selection of the candidate becomes very, very important. How much time you invest in finding the right fit for your business. And once we started, searching in the market, and we were fortunate to bump into some really good people, and who initially in our discussion were not at all keen, because test prep wasn't even a sector recognized sector for which you would want to build a career, that and a lot of people, it works that I work with a consulting or a finance company, or with a fintech or a startup. So nobody wanted to tell that I work with a coaching company.
Exactly.
So how do you build that story? How do you turn that around? So I think we worked a lot on fixing the narrative, that like, who are we, bring the good work forward.
Yeah.
And how do we present that good work became important. And to an extent, we were early on, we realized that this is important, we're going to do that. And we were fairly successful in putting that whole story together.
Nice. And you were able to therefore create that C-suite, feel ready for the IPO. And 2018, the market was turbulent. So you said that now we'll put it on hold. And that's when Blackstone comes in. And this time things align.
Yeah, and just to continue the thought, I think most people don't really, spend a lot of time in articulating their story. And I think that is where it became very important for us, because we knew in our hearts that we are doing a really good work. The amount of effort that we are putting, the amount of planning, the strategy, the amount of good societal work in terms of the outcomes that is that the work is bringing out. We're having kids from all humble backgrounds coming for our test prep program, getting successful, going to an IIT or becoming a doctor, finishing the program, going back to their village, setting up solar plant, changing the landscape of the whole district. So you don't realize the impact of the work that is happening in the classrooms. That we let the children dare to dream to go to good colleges, worked with them, got them there, and then once they are in those colleges, they started thinking bigger, and they would want to give back to their society, because everybody comes together in such situations to make you successful, so they want to give back. So I think, so when we would talk about these to the candidates whom we were interviewing, I said it's not about money, it's not about job, it's not about what wealth opportunity you'll create. You do good in this, there is a direct correlation of how the society will benefit. So there are very few businesses that allow you that.
This is interesting, because in India, there is a perception that let your work do the talking, right? Whereas what you're saying is communicating your own story in a positive way is actually required, right?
Oh, it's very important. In fact, my father always keeps telling me that if you are honest, look honest. It's also important, because if you're honest and people think that you're dishonest, it's a waste. Because sadly, everything works with a perception, and if your perception is that, even if you are honest, it doesn't really help. And if you're dishonest, you look honest, even that is not right. But tomorrow or later, people will catch on to that.
Yeah. No, and perception management is an important thing for the success of the business, right? Because at the end of the day, human beings are emotional creatures. We are not absolutely rational. And to that extent, I think it makes sense. Yeah. So,
And the world has also changed. You have a little window. You have a very small window of making decisions. And if the brand and the company and the story hasn't done a good job in, capturing that attention and telling that story clearly and honestly, so that company will not make a cut.
yeah, I think, and most companies, I argue in India, are underinvested in this part of the activity. And I think it goes in a large way towards the business, also the ability of the company to raise resources, which is both human and capital, to be able to fund that activity that the company is trying to do. How was the Blackstone interaction? Because by then, some systems were set up because you had applied for the IPO. So, in a sense, you were IPO ready. Uh, and then to go back and say that we'll push back the IPO by 3, 4, 5 years and get in a almost like a strategic partner. So, what changed in that time? Was it just market volatility or something else was also playing out?
I think when we were ready for our listing, this was the time when the ILNFS fiasco had happened and the markets had gone through a rough time. So we were actually waiting for the markets to settle and go back, because we had a year runway with our IPO card. So we were ready to wait. But then in the meanwhile, Blackstone team reached out and said, okay, this is what you're trying to raise. And rather than doing a public placement, why don't you look at private placement? And we told them, I said, we have seen all, how are you different? So they said,
So, you made them pitch to you.
yeah, so, just, they said, try us on. I mean, we'll do a diligent effort and won't waste your time or, do all kinds of funny things around. We won't beat around the bush. We'll tell you if it's good, it's not, it's not. But I think Blackstone investment was one of the good decisions that the family company did, and I think they brought in a good sense of rigor in the company, accountability in the company. But by then, since we were going listing, so we had put together a great team in place, and they've had worked certain number of years, and they've understood the business, and we were also on top of the game in terms of helping them and continuing to run the business. We had a formidable board which had joined us. They were independent directors. So as far as compliance, governance, everything is concerned, we were top notch on that. So that's where they felt comfortable that these guys have done that journey, and everything is in place. We just need to press the pedal and accelerate their growth story. And 2025, 26, we should look out and an exit.
Sure. And Blackstone round, was it a combination of you monetizing and primary, or how was that structured?
So fortunately, business was doing good and never needed external capital for the growth aspiration that we had. Uh, so the entire investment that we had raised with Blackstone was a completely secondary investment. It was for the family. It was used for the family, and for primary, the business had very strong, internal accruals. So even the Blackstone team also didn't feel the need. So much so that in that accruals and the free cash that we had in the business, we were able to acquire some of the players in the market to give us a good start in the digital side of the business, which we were trying to build together with Blackstone as part of our thesis.
This was 2018, 19, or 2019 when the round happened. 2020 COVID hits. And I assume all the coaching businesses which are offline are zero overnight, right? How was that phase for the company?
So that was a tough phase, no doubt. I think we had no idea, where will it go from here, because I clearly remember it was 22nd or 24th March when it happened in 2020, and our batches were to start that week. So, but the good thing that happened during that time was, back in 2012, we had started an initiative of online education, live tutoring, and everything. And by 2020, we had about 40, 50,000 students in that program and teachers who knew how to teach online. And we had the platform, which can be expanded or made available to other kids, whether it's videos, test papers, anything.
Mm-hmm.
So when COVID lockdown happened, so I think somewhere we took a bet that, let's move all the classroom students to the platform that we have built now and stabilize. And within week, 10 days, we were able to do that. And that really sort of protected the brand from getting any kind of hit or dilution that, you've taken fees and you're not starting the class. Obviously, the world knew what has happened, but, obviously they wanted to continue the education of the children. So that helped us.
And how were other coaching classes or coaching institutes who did not have this dealing with it? And I'll tell you why I'm asking this question in just a bit, but what was the contrast?
There was a struggle. I think people didn't know what to do. So I think overnight people were just, putting their Samsung phones on, camera stand and, starting lectures and recording it and sending through WhatsApps to students. So I think there was a lot of commotion at that time, and the people were doing whatever they could. They would just get in front of camera, record a lecture, put it on YouTube, send links to kids. So that's how people were managing in a very, very mixed way. Some were a bit tad structured, some were completely unstructured, but they were trying to cope with the situation with whatever resources and mediums those were available.
The reason I ask is because, when you're investing in technology, sometimes you don't see the benefits of it right then. But then an event happens which suddenly justifies all the investment that you've done in it. Right? And yours is a classic example of that.
And for that, it was, for us, I felt it was the investment and the learning curve. We knew, where would the system falter, and what kind of teaching pedagogy the student will accept on an online platform. What kind of test papers, what kind of teacher training would be needed, because the online also was a very funny situation, because it really opened the quality of teaching that was happening in the four walls. If there's a classroom, there's a teacher, the teacher teaches the classroom and goes out of the class, and nobody knows what he or she taught. But when you're online, the mother is sitting next, and then they would call us, are we paying this much money for this quality? And it was completely, anybody could question. I think that really was another opportunity for us to fix the pockets of poor quality teaching wherever they were, and made us even better, in fact.
Yeah, I think it's a great insight there that sometimes you need to invest in technology ahead of the curve, and it's okay that if it doesn't show immediate returns, it does come up a little later. Akash, let's flip to the next chapter of this book, which would be titled "The Biggest Acquisition in the Education Space in India." Right? How did that conversation first begin?
So this, I think I got a message from Byju that this is Byju Ravindran and we would like to chat. So our first conversation was so they were expecting that offline business, multiple centers, COVID situation must be going through a challenging time. But when we mentioned, I said we've completely pivoted to online. We had a platform. We've been doing it for the last 10 years. And we are comfortable. And in fact, we are growing. So that was, a sort of a surprise, a pleasant surprise to them that in this situation, how are you growing? I said, there's a brand pull, there's quality, and we are standing to our commitment of, we're continuing the education. We have not put a stop to it. And this is the best quality lectures in test prep that are available right now, and has been made available to all students now. So that's when they said that let's bring in the forces together. You are the king of offline, and we are leading in the online side. Why don't we put 1 and 1 together and make it 11? So I think that was the first level of discussion. I said, okay, it's probably a partnership or something. But then in the subsequent call, they made it clear that we're looking for 100% acquisition. We've just finished White Hat, that story that happened, and then we in the test prep side.
So White Hat had happened, Great Learning had happened.
No, White Hat happened 2019.
Yeah.
Or early 2020.
Sure.
And Great Learning happened after Aakash.
After Aakash. Got it. And when you took it back to the board and the investors, what was the reaction at that point in time?
No, I didn't take that conversation that seriously. I said, okay, fine, what do you say? He gave me a number which was quite close to slightly higher than the Blackstone transaction, which is $500 million. So I said, no, we are not interested. Thank you so much. So we have a journey and we are on that journey. Yeah. So it was not even a discussion that, I could have taken to anyone. Yeah. So then I think they came back and they sort of bettered that number by a few crores. And then I said, no, this is not going to work for us. And we are good. Yeah. Fine, we are fine. Our money needs are sorted. We just had a Blackstone round, and business does not need it. And online we have transitioned, so we will do this story. And we have done the Merit Nation acquisition, so we have a platform, tech team also. So we are, sorted right now, so we don't need it. So, but then there was a radio silence for about a month, 2 months, and then they came back that, have you thought about it? I said, we made it clear that, it's not happening. So then they threw another number, which is a decent number. They said, this is not going to work for us. We're not looking to sell. It's our company, and we want to go with the current plans that we have. So I think it kept happening back and forth. Then they brought in a banker in the middle. So the banker conversation started, and then we reached a point where they gave us a number, and that sounded like a credible number. It was 950 million, and then that number, we sort of internally discussed that, is it something that we can go with? And then as a family, we thought that, we are right in the middle of COVID. I don't know what's going to happen. Sure. And let's look at this number and let's look at an upside so that we continue to remain involved and continue to build this business as a joint force. Sure. And that's where the 70-30 transaction was conceptualized for a 100% acquisition.
And Byju was okay with that kind of a structure at that time?
No, they had wanted...
full and complete ownership, I suspect.
No, they wanted full ownership.
Yeah.
And they wanted more equity, lesser cash, of course. But we insisted on the 70%.
Got it. Got it. And how was Blackstone's reaction to this? Because they had just come in. Obviously, it was great in terms of an upside in a short span of time. But I suspect they would want this company to go IPO at multiple higher a few years down the line. So, what was their reaction to the offer?
So initially they were not, on board, but they were also wary of the situation that it's COVID, how things will turn out. Nobody knows. They also did their own internal discussion with their team in US and everything, and they came back that seems like the world's going digital, and if we are not on the right side of digital, then we have everything to lose. So I think that conversation they had with us, and then we both came on the same page that let's do this transaction.
A lot has been written about Akash and Byju and what happened subsequently, because Byju went through its own set of turbulence a year or so into this acquisition. At that point, how were you seeing Akash? Because there were at one time discussions about the family coming back into the business to run it. So there was a lot of, from the outside and seemed like a lot of discussions were happening. What was playing out in that time? And to that, I want to, like, how should a promoter family see a company post it's been acquired by a third party?
So I think a lot of things there. Post acquisition, since it was a 100% acquisition, so there was certain set of rights we felt that we should have retained, which at the time of transaction we didn't feel that we would need, because we were going in with a very very clean, pure, and a positive intent to make a impact, that we wanted to do it as a joint force. And I still say that he had a great opportunity. The kind of brands and the money that he had raised could have sort of scripted a very different education conglomerate for India, uh, which hasn't been done anywhere in the world. So they completely missed that opportunity. So as promoter, we were. I think the first year was fine, and by the time this transaction happened, we had brought in a professional CEO also. So we had done fair amount of transition in that 1 year after the acquisition. Uh, but as a promoter, we felt that it's very hard uh, to keep check of a professional's aspiration. Uh, in a situation like this, when there is unquestionable amount of money that is flowing in, and your objective is completely linked to sales and growth and outward looking uh, growth strategy, and I'm not looking at how you're controlling your costs, how you're controlling your quality, what kind of profitability matrices are you tracking. So we felt that in fact it was quite surprising. So after acquisition, uh, it, it suddenly dawned on us that we felt that we've left a very good system, and we realized that the moment we step out, people have just adjusted the system to their likes and dislikes, and that's where we realized that uh, any good thing, which and we've known it, takes years to build it, but to spoil it, it doesn't take much. And to spoil it, people don't really spoil it by one or two actions. I think it's uh, the mindset and the intent with which the team start to work. I mean, if you, instead of looking into the interest of the student, if you start looking into the interest of what is the incentive for me for this year, so your actions will be aligned to those incentives rather than what's good for the company or the student. So that transition and shift we saw in the people, and not to blame anyone, but if you don't have uh, a higher order thinking promoter, who's there as a guiding light as a self-correction mechanism sitting in front of you and checking you and making you accountable, responsible, people do go awry, and that's probably what happened. And as a result, the team, felt the pressure, and obviously on the Byju side, they were losing money and they needed money, and then they started taking money from their good assets, including Aakash. So that led more pressure on the Aakash business, and as a result, people became more conservative to their own interests rather than the company. That ये तो खराब होने वाला है, I might as well save myself. So I think so that philosophy we felt seeped into the minds of some people.
And at which point did you feel that you're open to sort of returning to the business? Because there was some, in a way, equity that you already had in the company by virtue of the stock swap
Yeah.
that had happened. So was that a serious
So,
discussion?
so we were supposed to swap our equity with the Byju equity, which did not happen because Byju on his side, there was a lot of I would say breaches of the commitments that had to be done did not happen because of their rounds not getting cleared, and their financial obligations and governance not getting completed, which were basic guarantees that they had taken. So we had to stop that conversion, and we sat with our equity, and we still do. But at that time, I think so Byju was in control of the company, and they were running the organization as they deemed fit. When I say they deemed fit, I mean they deemed fit for TNL, which is Think and Learn, which is Byju's parent company. So if that would mean sort of disturbing the other assets, they would go ahead and do that because they believed, and anybody would, that you keep the parent alive, the children will live. So I think that's the philosophy that they went on with, and that resulted in a lot of pressure and stress on the Aakash business. And as a result, some of the top executives left also the organization, and I think that's where the company felt the need that can we look at bringing new leadership, or should we call Aakash back into the business? And I think that was the discussion to your question started up.
Interesting. And in a sense, therefore, like, what's your advice to somebody who's monetizing their company, or especially when a larger company is taking over? What are the things, the 2 or 3 things that today you would do in hindsight differently than what you did then?
I think a lot of things. Anybody who's looking at acquisition, I think the credibility and the soundness of the acquirer is very important, and the chemistry and fitment of the culture and the values is also very important. On the face of it, we felt comfortable because before the transaction we could sign. We went and we met the team, we met Byju. We were comfortable at that time, but I think in the due course of building the whole TNL story and unquestionable money that is coming to you, I mean, everybody could lose track. So I think that's what happened. So if anybody is looking for a complete exit, that fitment, that is this the guy who can continue to protect and maintain the brand ethos, the product ethos for me and for my company after I have handed over or not. So I think that equation setting is something very
Is very
important.
important. I think there's a lot to learn, and you've spoken so candidly about it, so it's very useful for anybody listening. Aakash, I want to pivot to the education business because at one level it seems very hard to standardize. So much is dependent on the teacher who's delivering the content and the context in which it is being delivered, etc. How does such a business scale and replicate over different places? Because the teacher in one of your coaching institutes might be really top notch, whereas somewhere else that might not be the case. Whereas a student is looking at Aakash as a brand and coming in, and he's heard or she has heard good word of mouth from one center, but is actually joining another center. So how do you replicate quality in an education business?
So quality in education is a function of how good your teachers and the curriculum and the pedagogy is. And for us, initially we were dependent on the talent that was available in the market, and then we would bring them on board, train them, sort of optimize and orient them towards how we teach and how we do it here. But then we realized that we were not able to find very many of them, and obviously if they're jumping board from somewhere else and they're ready to jump board from here also. So and that's where we spent a lot of time, effort, and energy in creating our own training, so to say, academy, where we would bring candidates with good credentials, good pedigree, uh, rigorous selection process on board, and then train them for 4, 5, 6 months till a point we feel comfortable that they're ready to get into the class and take on batches, students, live lectures. So that single step allowed us to a not only scale but b also retain, because if there's only two teachers in the center who are good, you're always in the fear that they will always blackmail you or jump the ship whenever they want to. So when they had a battalion coming and sitting right next to them, and they are also reasonably okay, so then they felt that if I sort of threaten them that I will leave, they probably will say go, because they have somebody who can take the lectures. So that allowed us a great amount of retention. It allowed us a great amount of scalability in the business.
Yeah.
And I think, I don't think in a service business, any service business, you can survive or grow without having a very, very strong training academy at the core of it.
Sure.
So if last I remember, this FY24, we would have about 6,000 students, teachers, on our company's roll, on Aakash's roll, and about 50% would be from campus. So that's the
That is the homegrown talent
that's the homegrown talent, and some of the talents have started as a teacher, junior teacher, trainee teacher, and have gone ahead and become city heads, state heads, region heads. And they've not only grown as a teacher, in their subject, but also in their leadership and managerial skills. So we were able to give tracks outside of academics to people who are from teaching fraternity.
Aakash, how do you manage this dichotomy that on one hand there are these experienced folks who joined you from outside the industry, and then you're creating a cadre of your own which is coming up, right? The cadre of your own is probably willing to undergo that training process, etc. Whereas in a sense, these superstars who come from outside sometimes find it difficult to adjust to that. So how would you subject those guys to the training mechanisms, the pedagogy, uh, the curriculum, standardization, all of that?
So I think some hard stances, uh, because we always believe the system is bigger than individual, and if you are good and you want to come and work with me, then you should not have problem with my systems and processes. There were situations where they would, teachers would walk in, I have 20 years experience, 30 years experience, and you're going to test me out, train me. Why do you need to train me? I'm like fully trained. So we would let them go. He said, no, I mean, I come to your house and I tell you, oh, your, color of your curtain is not nice. How will you feel about it? He said, you're here for half an hour and you're telling me my interior choices are not up to your taste. So thank you so much.
You have a beautiful house, I must say that.
No, I'm just saying that, people.
But I get the point.
Yeah, so we would be very clear and say that, sorry, I mean, this is how, and no disrespect to them. You've accomplished something in your life, good for you. But if you want to work with us, you have to fall into the systems and the boundaries that we have defined.
Hmm.
Like today you're asking, I don't want to do tests. Tomorrow the other guy will say that, I want to do test at my home. I'm senior teacher. The other guy will say that I don't want to go to training. I'll do only 1 day training. So how will I manage? The new guys will also say that, this guy is not walking into the training. Why are you asking me to get into the training? So it's system, it's same for all. If you feel this is not comfortable, no problem, you can go.
But that also slows you down sometimes.
Yeah,
Because
actually, it's a myth.
okay.
I feel it's a myth that people feel that saying no to good talent will slow you down. But what it is doing at the subconscious is sending a very strong signal in the market. Because if you say no to a guy, and this would happen, and then he would go back and say कि मुझे मना कर दिया, and then the market would say अच्छा इनको मना कर दिया, the system must be very good. Because humans by nature, look for certainty, and if they find leadership, that has iron will, and they can stand by their words and commitment, that is the place I want to go. I mean, why are people running behind Modi? Because it's an iron will. That I will take you there, and we'll say okay, we'll follow you. We don't want to put our mind, figure out who's the next guy, who's the right guy. We can't do sensitivity analysis on candidates here. So you say it, okay, we'll follow you. So I think that messaging was very important, which we realized later. We were doing what we thought is right. So we realized that people are coming back that, you did a good thing. I want to work in an environment where there are teams. So then we would get far more committed, accountable, long journey people, and not arrogant people. Because in teaching, it's exchange of knowledge. You can't get arrogant. Because if you're teaching wrong, or if you're not sensing the ability of the student, you can't push through that knowledge into that child. You have to be very submissive, very understanding.
No, I think while you were talking, there are so many similarities with wealth management in a sense, because we also want wealth managers to get trained, educated. The systems are evolving. So while there might be superstar wealth managers out there, we want somebody who's adaptable, who's curious, who has low ego, and is willing to align with the new way of investing. So I think very interesting. The one thing which is rumored about is that there are teachers making anywhere between $1.5 to $2 million a year. So that's I've heard, and teachers making 10 crores, 15 crores in the star coaching plus institutes paying teachers that much. How much of that is true, and is that even a reality?
I don't think that's true. It could be some people who are, becoming partners in the new outfits. They could be that could be the committed amount, over a period of time, or if they do certain things. But typically, star teachers whom we here are doing exceptionally well, and they are sort of star teachers, would be in about crore, 2 crore range. So that's a very good and a heavy package, I would say, for a star teacher.
And this happens over a period of time, like the star teachers. When does somebody get recognized as being a star performer? Is it the feedback of the students, or is it the results that you're getting from that teacher? How does that
It has
evaluation?
to be both. The students are happy. They tell their parents, and the parents tell their friends that, if you are also looking for a program, where just make sure that your child goes into that teacher's class. And of course, outcome is very, very transparent that, my kid went to that teacher's class, and, he or she was scoring X percentage, and after that class, started scoring higher. So there is a delta that the teacher is adding. And if you're looking for adding a delta to your child's performance, then this is the guy. And of course, when the entrance results come, people get to know that, which batch this kid was and who were the teachers. So that's how, the teachers become popular, their name become popular. But now, of course, there's social media, there's YouTube, and it's easy to propagate your star teacherness basis how you deliver and how many likes and comments, and you get an idea from that.
And in this kind of an environment, how does an educational institution like a college attract talent? Because on one hand, there are great teachers getting paid 1 to 2 crores. That's nowhere close to what they would get paid in a college. How does India's education system deal with this kind of challenge?
So there are lots of challenges in education system, especially around having teachers, good quality teachers. So India struggles a lot because teaching, unfortunately, is seen not as a career of choice. It is typically, historically, traditionally been the teacher profession. Teaching profession has been, कुछ नहीं कर सके तो teacher बन जाओ. So I think that's been the trend in the past. But now, people have started understanding that if I am becoming good in a skill or I'm picking up a subject, now I don't have to, really open an institute. I have a platform. I can go out and I can, deliver my content, my lectures, and become popular, earn my living. So people are now comfortable with that, and with online, the timing also works. But having said that, there is a very clear, uh, set of people who want to work more on the research, more on the university level. So obviously they are always attracted towards working with a reputed institution or a university where they get to teach also, do their research also, get opportunities for consulting projects also, and then obviously build their knowledge base continuously. Because when you're in a university, the amount of in a formal education, the amount of uh, knowledge that you can continue to upgrade yourself with is far higher and far deeper than if you are in a coaching institute or a informal education sector where you're just teaching the same topic for the last 10, 20 years and not progressing beyond the boundaries of the syllabus. So that can get monotonous. So there's always an attraction to go to formal education because, especially for people who want to build, within that field of education.
How big is the test prep market in India in revenue terms on an annual basis?
Okay, if you were to ask me some years back, then I would know the numbers exactly. I haven't been
Sure, but maybe let's
tracking
say
it,
a
but
few
I
years
think it
ago.
should be about 50, 60,000 crores should be the test prep market, as I would
So
say.
arguably today it'll be between $9 to $10 billion, because if these numbers are a few years ago and that has
Yeah,
grown,
yeah, but this would add, your medical, IIT, IS,
sure,
all kinds of
things put together.
test prep programs put together.
Why I ask you that question is because recently I saw the demo of ChatGPT 4.0,
Yeah,
where Sal Khan from the Khan Academy is with his son,
yeah.
and
Yeah, even I saw that. Very interesting.
the device is explaining to the child in a way a one-on-one teacher interaction would happen about a geometry problem.
Yeah.
What do you think is the impact of AI on, let's say, test prep and therefore on the lives of teachers going ahead?
Significant. Uh, so much so that they'll not know what hit them. It's gonna be a very, very important, I would say, industry changing event. And I don't even look at 5 years from now. I think it's probably 3 years.
And are educational institutions, coaching institutes, even preparing for this? Because that's almost irrelevance coming up in 3-4 years' time.
I don't know how they're preparing for it. They better be, because the the speed at which AI is getting induced in the field of education is unprecedented, and I don't think it'll take more than 3 years for students to realize that for their any and every education need, interactive education need of reasonably high degree of difficulty, and AI would not be able to. Absolutely, they'll do it.
Yeah, because children are probably the earliest adopters of technology. They are native to it. And if they can use some of these tools, I think this industry is coming up for some serious shocks ahead, probably.
Absolutely, I think because you see, and technology has done that over and over again. If there is something repetitive, uh, machines can do better. And if there is something that needs human connection, and that's where the effort from the human body and the strategic thinking must go on. Not, I mean, if you're teaching laws of Newton, you're teaching them for last 100 years. I mean, they haven't changed. So the machine can today teach the same known information
Yeah.
far better, with far more relevant examples to your EQ, IQ level, because I've assessed you
In Amitabh Bachchan's voice. Like,
in any language and in any voice,
yeah.
for that matter.
Yeah.
For example, today the star teachers are the English and Hindi speaking teachers. What about the kid, sitting in, Karnataka or Gujarat, who wants that quality teaching, but now AI can solve that. So the competition, the availability of content, good content, interactive content, which was a challenge, will get solved by AI.
Amazing. Akash, through this entire journey, there was a massive amount of wealth creation that happened, liquid wealth that got created. How did you think about deploying it? What were you investing in before these events happened? Like, how were you going about your portfolio then? And what changed when this money came in?
Nothing much. We were earlier
Except
very
the zeros grew.
No, I mean, we were earlier very conservative, now also conservative.
Okay.
I think as a family, as our thinking process, real estate has been a category for us where a significant amount of investment have happened in the past and continue to happen today, and we feel strongly about it. And outside of that, we've really not experimented much. Obviously, the family, like my brother runs a healthcare business, so there's investment that is going into an operating business. So we've always believed in कि मेहनत करो पैसा कमाओ, पैसा लगा के बैठ मत जाओ.
Passive income nahi chahiye, active income. Yeah. And how is the healthcare business different? Was it always in the family, or was it something that happened after this?
Yeah, so it started with a smaller outfit in 2011-12 as a polyclinic, and then it transition grew into a hospital business in 2017, and then we opened 2 more hospitals, and there are more in the making. So I think that's a business that is, you can say, about 10 to 12 years old.
And it's still fully owned by the family.
It is fully owned. It is fully owned by the family.
And to that extent, it might have its own journey.
It is actually having its own journey. My brother is leading it independently, and it has his own journey, and he's on his path to build that business.
And therefore, outside of the investments that you've done in that business, there is real estate and there are financial assets.
Yeah.
What would be the percentage split across both of these categories?
I think there was a lot of real estate investment that had happened in past. They continue to hold, and but majority remains as a liquid cash.
And in terms of the financial side, you said it's very conservative. So it's largely fixed income.
Largely fixed income.
And then some public markets.
Very little. Very, very little.
So do you also do sort of some of these more aggressive startup investing? Have you invested in other companies where you
after the exit, I sort of thought about it, but we did in the initial period,
because you'll be getting great deal flow and all of that.
Yeah, we were getting deal flow, and we did invest in certain private placements, but I don't think that's an area that I've figured out in last 2-3 years is an area that I would want to pursue heavily. because operating business is where our heart lies, and we feel that there is a far more control on the narrative. You're able, and then as an entrepreneur, you uh, get the feel of you've created something and you're building that without any external parties intervention. So I think that becomes important to me personally, and I think that's how now when we're looking at also we're looking at setting up some operating businesses.
I love the clarity of thought that there is operating business, there's real estate, and everything else is very stable. So that's very clear. No, this has been a fantastic interaction. I learned a lot, and I can almost see so many parallels for the wealth management industry and so many learnings for me personally in this conversation. Akash, thank you for the time and thank you for hosting us at your beautiful home here in Lutyens, Delhi. It's been great being here.
Thank you for your candid conversation. I hope the viewers and you enjoyed the conversation.
I'm sure everyone did. Thanks so much, Akash.